Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So yes, we had a few different things go on today. You had the ADP, which was a little light. You had the GDP, which was very strong. And then you had the Fed that pretty much, said everything that was expected. You had a little whipsaw action. And overall, we pretty much closed in, in the same type of spot where it's just not really clear cut. Definitely some divergences going on, and there are sectors that are just already corrected 5% plus, and some of them have been out of play and just remain out of play, and then some things still hang in there. And then you have the certain setups, certain strong stocks, and it's been very specific. And if you happen to add to something at the wrong time, you're probably ruining your long. And if you shorted the spiders and added to it every time it looked like we were going to break today, you definitely got a little frustrated that way. Same thing goes for the banks. The banks started off strong with the GDP, came in, looked like the market was going to fall apart, so they were hard to trust. Then got strong again, and then came off the highs. It's just the way the market's trading. Twitter also. Twitter had a huge gap up, and you had to be in it either last night after the report, buying it through 41, 43, 44, or you had to be in some kind of calls. But if you tried buying it today, you probably net down, and you have to wait to figure it out. So let me just start going through some charts and some things, and get going here. You look at the SPX. Here's that intermediate trend right there that wound up not breaking before we went higher. And then here we are again. And if you look right there, it's like, come on, what are you going to do here? Below the 8 and 21 day, which it really seems like it is. It seems like the S&P wants to go down, but we keep getting a merger, we keep getting good earnings, we keep getting sector rotation. So overall, we came off the lows. And I still think it's a little dangerous. The stock market's it's definitely, hanging in there, but I think just where we are prone to what could be somewhat of a corrective move, even just to the 50-day. Here's your resistance, and here is, I guess, your type of wedge. So at this point, this is all we really know going into tomorrow. We have the low that was put in today, which was above the prior support, and then we have this little pivot, which we closed right around. So it's just a lot of mishmash. So with the mishmash, you have to be in the strong spots if you want to be long, and then the weak ones if you want to be short. I was looking at some things, and you look at the XLI, it's already corrected. The industrials have already moved down 56, whatever this percentage is. I don't have the brain power to look at it right there. You have the Homebuilders, which have that led us last year or the year before, and now pretty much have been out of play. You've had to really believe in the short, because it's just been so slow and below every moving average. And some would think this would be a telltale. And so far, it's it's corrected a lot from the highs, and it's below all the moving averages, but it hasn't dragged the market down. You look at the Russell. The Russell tried to be somewhat strong. The past session or so, but I guess it still doesn't look so hot, but it's above the 12, 20, and then you do have this smaller wedge being built here. This was the last time it broke out and gave you a nice move, and then this was when it somewhat failed, and now it's trying to figure out what's next. Anyway, let's just get to some stocks. Twitter, stock of the day. I'm sure you never heard it on TV today. Wound up coming in with such nice expectations, at least I did. Thank goodness I had the options overnight, because there really was not much money to be made at all in it. What do we have here? What do we know? We have a big gap. Okay, let's see if it could stay above the gap, go sideways, and then at some point take out the high of today at 48, and that would trigger follow through. Sometimes it works its way in, lets the moving averages catch up, and then that would be frustrating, and it would be a choppy trade. So 45, 65 is your pivot, and this is your resistance there, and got to figure out what happens in here. If we get a nice inside day tomorrow that turns green, perhaps gives us some conviction to go out. I do think you could go out at 3 to 6 months and buy some $50 calls, and I think you'll probably do pretty well. But as an active trader, we'll see how many days it needs there. This bar looks a little bit different. I was hoping to see something like we saw with Facebook, way back when. Facebook had a really tight, cup and handle pattern, had the big gap up over resistance, and wound up holding it and turned green and gave you a trade that day besides the options. I remember having the options that day. And if you want to like look at just to try and see, you know, what happened here, this one went really fast, right? This one this day was probably just as frustrating, maybe a little less frustrating than the Twitter day if you were trying to buy high or whatever. But then you had another inside day, and then once it took out that 2-day pivot, that was your ad, and that gave you a really nice trade, and that's what started that trend. As far as Facebook right now, let's see where it is in the scheme of things. You know, it's traded a little bit into its earnings gap. The 21-day has caught up. You know, I actually made a little, you know, I traded this today too, and it looks okay. It's just not really going anywhere fast, but I guess, you know, it needs some time to absorb this move, and the market wasn't sure what it wants to do. YELP came out after earnings, was up. I'm not sure exactly where it is now, but when I walked in here, it was trying to stay above 80. If you're trading this for momentum after hours, I would stay in it only if it stays above 80. Sperling, got to say, and this was his play of the week. You know, granted, if you didn't take it into earnings, that's fine, or if you took options, but you didn't have to. If you just treated it as a day trade, it was strong all day. LinkedIn was his play of the week last week. If you guys aren't signed up for his play of the week and his stuff, it's like, you know, all they are really good high percentage plays, and this one was last week, and look at the size of the move, and then when the market came in, it gave you a nice bull flag, and now boom, it's already reclaimed the 200-day, so it is acting better. You know, this stock's been in a corrective phase for, you know, a long time now, and it's just breaking this downtrend. It still has to report earnings on Thursday, but you know, it's already made its run into it. So if you've been holding it for the run before earnings, you don't really even have to be in there for earnings because you already made your money in that move. Apple's been quiet. I don't even think I touched it today, which for me is something different because I usually trade Apple a lot, and at this particular point, I think it's getting close. One more down day, maybe I'll take a look to accumulate again. This trend's still intact. I do think it's going to come into this 8-day. You know, I got out of it pretty much when it came back below here, and you know, I try and be a little perfect, I guess, with Apple, but there is no need. I do think that it's going to eclipse that. It's just a matter of when. You know, we've had lots of nice trades along the way. This was a nice tight pattern before going again. Then you had this corrective descending channel where if you were cute, you could have been out of the way until this red dog reversal right here. Then there was your ad, another move. Then this was where we were before earnings. Then you had this little bull flag, push through, and now we're hovering above it another day or so, and I think it can go again. I still wasn't exactly sure what the market was going to do. Well, it did feel as if, you know, you looked at some of these other indices. You look at Germany below the 200-day. You look at some of the other groups that are testing the 50-day. It felt as if they could have used today to sell the spiders. So I wasn't ready to just start, you know, being in portfolio approach, even though I do have a few things on. I still have GPRO on, which is looking good. Okay, I have the options on. If you watch me from the virtual trade floor from this day, so far so good. I haven't been able to day trade it well, so I said let me buy the, you know, the $40 calls. And now I'll see what happens where it is come earnings, which is tomorrow after the close, but it closed really well. I didn't even see it close that well. That's what happens when you have options. You don't look at the tick by tick, so sometimes that helps. I think I bought those options at $5. I think they went out at 7 maybe. We'll see. Also have soda options left over from you know, last week when it, you know, it had the big wide range bar and then came in on the close. I bought it. They're up a little bit. We'll see what happens here. I'm not expecting huge things, but at some point, maybe, you know, I think I have a few weeks out, could try and get up and get to at least here, maybe even 40. And I was actually expecting some kind of, you know, collaboration, not good earnings or whatever it was, but we'll see. Nothing so special there. The banks tried to go again. They're just sloppy. You know, they just don't have the power. And at this point, Citigroup, you know, still looks good. It's above the 8-day, closed around 50. I'd love to see a little bit of follow through with this thing. You know, it's above the moving averages. It's trying to go. Morgan Stanley had a pretty clean move too, back after a controlled 4-day pull-in. Big wide range bar. You know, it's still just I feel like people aren't in a rush. Bank of America talked about a potential settlement, so it had a better day than it's had in a little while. At least it's still in the game. I guess, you know, above this with real authority, perhaps maybe it goes. I think if they'd say anything around $15 billion or less in their settlement, maybe that could help ignite it. Still above support here, so it's hanging by a thread, just not very strong, not leading the way like it's done in the past. And if got out when it broke the 8 and 21 day there, or got out when it broke this false breakout. I guess you could be trying it in here, but just realize that it's not showing relative strength, and it's definitely not the best one out of the group right now. Goldman having a little bit of trouble up here, still holding the 8 day. It tried to go a few times and just didn't have the power, which again, the banks just haven't had the powers. You had to be pretty perfect on them. Google, what's this going on here? Still hanging by a thread. I'd put this on the radar that if we do rally tomorrow, the day after the Fed, there is a small chance that you can get a nice trade above this 597 for it to try and go again. I know it's lethargic, capital intensive, but it's looking okay. I talked about a potential trade in Netflix after the Red Dog reversal, and granted it doesn't look like much, but it was up, what, $9 yesterday. It tried to do it, couldn't. Today it was pretty strong. Here is that small Red Dog reversal right there. So it's not a blockbuster trade, but something there if you were looking for relative strength just for the day using a tactical pattern. And if you're still in it from the Red Dog reversal here, where you risked, the entry would have been 419.02. This was 418.52, so you risked 50 cents, and you know what, you're up almost $14 just by using that tactic. Coming in from 455 to here, there's your reversal pattern with a plan. A little bit of upside the following day, nothing greater than boom, it went. So that's how you work that out. And Amazon, I think, is kind of interesting. I was, my little instinct. I think I have like a little friend on my shoulder that has my instincts in there, and it's showing this nice tight 4-day pattern here. I was looking at options. I didn't do it at the end of the day. For some reason, I feel like in the next session or so, it could try and trade into this gap just for a trade. I'm not thinking it's going to be a huge, big gap fill. It's probably going to be hard to trade it, but at some point, maybe it tries to get back up to this 335. So that put that on the radar, or maybe even the 200-day, which is right there. If you remember the last time, it had what did it do here? Oh, that gap was all the way up there. It filled whatever this was, a portion of it, before heading lower. So it just whatever. I'm just eyeing it as a potential tactical trade. The metals, you look at something like gold, still nothing, and definitely frustrating for guys day to day. Here is your key support. Still, this is your, I guess, lower part of this upper or this whatever you want to call this. I don't even know, mess. So I wouldn't be bullish on gold unless it gets above 126, and it seems as if it's getting close to breaking 124. Today you did have rates go a lot higher, or at least do something different. The TBTs ignited to the upside, the TLTs to the downside. If you were waiting for some type of signal to buy the TBTs, at least today gave you a small one. Now you have to measure the commitment. If you've been riding this bond rally and you're like, where could I sell? Today you had an excuse to sell. You look at the TBTs. It's tried this before. Obviously it hasn't stuck. But today it's trying it again, and now you want to see if there's commitment to this wide range bar. Again, not like so crazy, so potent, but if you were short this, maybe you got a chance to cover, and we'll see if there's any commitment to it. Each time there hasn't been. You look at the TLTs, and that's a pretty potent down move. It's had a very significant run. So some would say that this is a little bit of a breakout failure. It's below the 8-day. You would think that it can come into maybe around here or more. So if you were looking for, like, even if this wasn't the TLTs and I was just looking at the chart, I would say, ooh, could be a little trouble right there. You have an ascending channel not really going above a prior pivot, and then broke below it, trapped this range. I would have been a seller of this stock, and some might even have shorted it. So just my 2 cents on the technicals of the TLT, without opinions. And it's Wednesday. Feels like it's been a long week. For me, I had a very choppy day. Came in with a great start with the Twitter options, and even managed it pretty well, where I covered the stock, sold my options, waited for a pivot low, bought that, figured we'd get some kind of close a little bit higher than the open. Just didn't happen. Facebook was also a little wishy-washy. The banks, back and forth. I was buying the banks when they were strong, and then shorting the spiders when they were weak, and they just one of those type of days. And I guess those type of days happen in our business. If it happened to you, you're not alone. And if it didn't, congratulations. You know, you were in the right spots because there were a few of them. Or you said, this is Fed day. Fed days are tough, a lot of false moves, a lot of wishy-washiness. I'm not trading Fed day. And then, you know, that's good. At least you stuck to your rules. So tomorrow's another day. We have you know, more earnings to sort through. Friday we have the jobs number, and you know, I think it's still a very testy market, but a market where you have to be very careful on your shorts and your longs, and it's also midsummer and the volume's light and there are air pockets everywhere and their boxes are having fun with each other. So if you're not having fun in that whole mix, you know what, go to the beach, go to the mountains, enjoy yourself, refresh, because at some point you know, we can get a little bit more of a trending, conducive action where there's more clarity. Have a great night. Scott Redler, T3 Live. See you in the morning.